Welcome back everyone. In today's video, we'll be diving deep into the essentials of designing chart of accounts, especially for Oracle ERP. Today, we'll be answering few important questions like what are the key principles for designing chart of accounts and what are the best practices that you should follow while designing the chart of accounts and how the industry specific needs shape the design of your chart of account. So stick around for the next 5 minutes and we'll answer all these questions. I've invested hours into researching and compiling this information, and as a certified Oracle consultant with a decade of experience, I'll be sharing my insights and experience with you that will save you a lot of time and headaches. And also, you need to stick till the end to know how you can download a free cheat sheet that will help you design your chart of accounts for your projects. While designing chart of accounts for any client in any project, I keep these 5 principles in my mind, which we'll be covering in this video. So let's start with the first principle, which is understand the purpose. So why it is so crucial to understand the purpose of your chart of accounts? Your chart of accounts need to align with the business goals and organization's goal, and it should support report clarity, and it should also support decision making for the business. Suppose your CFO is looking for a balance sheet report on a certain level, then your chart of accounts should be able to support it. Next is consistency and simplicity. Recently, I worked with a mid-sized manufacturing firm, and when we were reviewing their existing setup, we found that they had almost 12 segments in their chart of accounts, and some of the segments even had more than 800 values. And there was a lot of inconsistency among the naming convention and the numbering system they had followed. So you can understand this kind of setup would create a lot of confusion and will affect the reporting capability of the ERP. So while designing the chart of account, you need to ensure that you keep the number of segments between 5 to 9, and you rationalize the number of values for each segment, and you need to follow a strict naming convention and follow a strict numbering format so that there is clarity and consistency in the system. Another important aspect is how compliance play into your chart of accounts. You need to understand that there are certain regulatory organizations and government organizations which mandate you to generate your accounting in a certain format. You must have heard about important accounting principles like GAAP and IFRS. And also there are certain regulations related to tax. So you need to ensure that your chart of account is able to support all of those requirements. Otherwise, you will fall into a very costly mistake. Next, how do industry specifics play into your chart of accounts? Consider a healthcare provider versus a retailer. Healthcare provider will focus on patient services while the retailer will focus on inventory management. Each requires a tailored approach. So you need to tailor your chart of accounts according to the industry needs. That will ensure compliance, and it will also provide meaningful insights to your business. And last but not the least, your chart of accounts should be scalable and should support the business growth. You should understand that your company is a growing entity and you might have future acquisitions and further expansions to new regions, or it could be that new products might get launched. So your chart of account should be able to support all of that. And also we have new technologies coming up now like Gen AI and data mining. So your chart of account should have certain segments that can be used later. For example, there's a provision to add a future segment for later use. So your chart of account should have all those built into it to support future growth. Now let's apply these principles for real case studies, and now we'll be covering 2 case studies, one for service industry and another for manufacturing, and this will surely help you understand the concepts that I had just explained. So here we'll be seeing 2 case studies. We have kept things very simple. In a real life scenario, there are a lot of requirements and nuances that has to be kept in mind while designing the chart of accounts. So let's start. In this case study, we examine a car manufacturer with production facilities across India. The management is seeking a reporting structure that allows them to generate balance sheets at the legal entity level and assess profitability at the plant level. Additionally, they require the ability to track costs by department and analyze profitability and costing across multiple product lines. The company has also indicated challenges in monitoring intercompany transactions. To address these needs, we have designed a comprehensive chart of accounts featuring 8 key elements: legal entity, plant, department, natural account, product, inter-unit, future 1 and future 2. You can see here the legal entity serves as the balancing segment, which is crucial for ensuring that credit and debit balances match, ultimately facilitating the creation of the trial balance and the balance sheet. Therefore, we have designated the legal entity as the balancing segment. The department functions as the cost center, aligning with the company's goal of tracking costs at the departmental level. Furthermore, we have included plant and product segments to provide detailed profitability analysis. The natural account segment encompasses various account types including expense, revenue, liability, and asset. Additionally, the inter-unit segment is designated to capture intercompany transactions. We have also incorporated 2 additional segments to accommodate the company's plan for aggressive expansion, ensuring flexibility for future structural needs. Now, we have also given an example what could be the values of these chart of accounts. ABC Private Limited with a code 201 could be your legal entity. Mumbai plant could be the value of the plant. Sourcing could be the department. Account payables is one of the accounts that could be used. And then you have a car called Model S as product. And for inter-unit, you can have another legal entity of the group. And in this example, we have kept default values for the future segments. In the second case study, we analyze a car reseller platform, specifically a startup seeking effective reporting solutions. The company's agile business model adapts frequently, yet they require their balance sheet at the legal entity level to meet statutory compliance as an Indian startup. Additionally, some departmental costs have been inconsistent, prompting the need for more effective cost tracking. The company offers a diverse range of products including hatchbacks, sedans, SUVs, and luxury vehicles, necessitating product-wise sales tracking. They operate through multiple channels, offline, online, and omni-channel, as well as through telemarketing services, and they aim to monitor revenue across these channels as well. With numerous locations throughout India, including multiple hubs, retail units, and resellers, the company also seeks to track revenue and cost on a location basis. Furthermore, they manage various subsidiaries within their group, including a financial services unit that provides loans and a spare parts company responsible for procuring and supplying parts for vehicle refurbishment. Given their rapid growth, they have also included 2 future segments to accommodate new business avenues. To address all these requirements, we have created these chart of accounts with 9 segments where your legal entity acts as the balancing segment, which will allow you to get the balance sheet at the legal entity level. And department is again your cost center. Then we have natural account, product, channel, location, intercompany, future 1 and future 2. Your product and channel will give them profitability for their product line and the different sales channels that they have. Now we have also taken an example where Cars 42 Private Limited could represent their legal entity with a specific code. The department could be sales. The account could be their account receivables account. The product could be Mahindra XUV 700, which is one of their products which they sell. And channel could be the offline store. Location could be your Gurgaon Sector 87. Intercompany shows another entity which provides them the spare parts. Again, for future segments, we have taken default codes. So with these 2 case studies, we were able to acknowledge the principles that we had studied earlier. And after applying them, we have come up with these chart of accounts, which will help the companies to achieve their objectives effectively. So in these 2 examples, we have clearly seen that applying the 5 principles that we had talked about earlier can really help us in designing the chart of accounts effectively. So let's review those points once again. First is understanding the purpose. Second is keeping it simple and consistent. Third is aligning with the regulatory requirements. Fourth is incorporating industry specific considerations. And fifth, designing the chart of accounts in a scalable way. So if you stick to these 5 golden rules, you will be able to design the perfect chart account for your project. Thanks guys for watching. And if you like the video, give it a thumbs up and subscribe to my channel if you want to watch more such videos. I had created another video on this topic, which is the top 5 mistakes which consultants make while designing the chart of account. You can see the link here. And do not forget to check the download link which I have mentioned in the comment section for the cheat sheet I had mentioned at the start of the video. So see you guys in the next video.